Has something structurally changed that you're going to increase demand? Well, it's not money printing, because we've been money printing for decades now, and it's never produced inflation. In fact, Japan couldn't produce inflation. It was never an inflation thing. It was a collateral thing. Could I be wrong? Could something happen? Of course. Could it be geopolitics? But it just feels like we've just trampled out most of the geopolitical fires in one go.
Hey guys, welcome to Everyday Finance. Raoul Pal, a well-known financial expert, investigates the future of cryptocurrency and analyzes whether the market will recover or continue to experience further declines. His analysis focuses on the most important market trends, institutional interest, and investment strategies that have the potential to influence the subsequent phase of cryptocurrency growth. Pal maintains a positive outlook regarding long-term adoption, despite the fact that the company is experiencing volatility. Pal emphasizes that cycles of expansion and consolidation are natural in emerging markets. In order to maintain their interest in digital assets, investors should concentrate on the macroeconomic factors and technological advancements that continue to drive this interest. Like the video, comment, and subscribe for more videos like this. Let's watch the video.
It's actually been remarkably quiet from the kind of gold bug macro crowd. I think because they know that Bitcoin actually falls in line with their thesis of things. And so I've seen that subtle shift where we're seeing less kind of snide comments, but the great holdout, the beautiful holdouts are the FT and the Economist. I mean, they are relentless. They will not stop. It's been 12 years now since this thing hit mainstream, and they're still cynical, and they hate it because it's a system change where they were the gatekeepers of knowledge, and now we've just basically decentralized it by a bunch of apes on the internet fucking around on Twitter. And it's like, well, where is our place in a DeFi world? You know, their complete worldview, the Economist and the FT, is basically collapsing around them. So they're doubling down on the angry old men shaking fists at clouds routine. It's like, really? I mean, even CNBC, Boomer TV, actually talks a lot about crypto. Good on them.
And not negatively nearly as much
at
anymore.
all. They're actually pretty pro. They're pretty pro crypto.
Yeah.
And they're pretty. Their average age of their audience is about 72 or something, 73. It's like smack on the baby boomer group, but they've got the boomers across the line. But yeah, it's the two holdouts of those two media outlets. And then the other people they don't want to get the technology angle. To them, it's all a bubble. To them, AI is just another internet boom. Last time I checked, that internet boom bust is like this much on a chart that does this. Crypto is actually fundamental to the future of the internet. So what we did is we concentrated power into the hands of Google, Apple, Microsoft, a bunch of these people, Meta. And what happened is, and we concentrated the music industry, we concentrated a bunch of things in the hands of few. They got super rich and we didn't. Right? We gave our information away for free because we were entertained. They were like entertaining the chimps at the zoo. And we were like, oh, this is amazing. I'll just give all of my data to you. And we've now realized that we've been robbed. And so this layer of Web3 changes a lot. So it allows us to own our data, to authenticate what we want people to have. In a world of AI, we can prove we're humans. We've been talking on X, there's a bunch of people talking about KYC, AML compliance, right? That's really should just be a once a year thing with a zero knowledge token. And I just pass it to every, and it just does it instantaneously. Well, we don't, because it employs millions of fucking accountants, administrative firms, and all of this stuff. It's madness. So all of this can change. Then obviously in a digital world, everything digitalized goes to zero in value or cost, almost instantaneously. We've seen it with everything. But what blockchain does is create digital scarcity. Okay, that's profound topic, which is why it's be able to create Bitcoin, but also it allows you to have smart contracts of any contract and all of this. So it's the efficiency layer as the internet scales that we have to reorganize around what we call Web3 now. And people think it's all to do with crypto prices, token price, nothing to do with that. It's just an internet for the future because we're living more and more digitally. We have digital goods now, things we didn't have 20 years ago. Now, so this becomes very important. Instantaneous contracts, and everybody's around the world. I mean, 20 years ago, you and I couldn't do this. We'll be on a phone with each other, right? It's happening so fast. So crypto is that, but it's also the efficient rails for the financial system, just at simple level. An equity that is tokenized is instantaneously settled, globally available. If you think of the US wants people to access its capital markets, well, this is the way. Look at bloody stable coins. That's global fractionalizable euro-dollar market. One of the largest markets the world's ever seen. This is now getting bigger because of this. So that's the reworking of the financial system. But then there's another superpower within that you and I are part of, is the rejection of the institutions and trust in the institution of finance, the middlemen, the intermediary, the gatekeeper, and the complete explosion that started from Occupy Wall Street and then went warp factor 10, GameStop, the crypto stuff in 2020, and looks like it's going to go warp factor 10 squared this time around, is self-directed investing, right? It's a big deal. And what we're doing is we're using the internet to organize hive mind, which is you get all of the voices coming together and then you somehow filter the noises to look for the signal. Now, that'll all happen with AI. This is what we're doing at Real Vision, exactly this. This is the mega trend, and we're helping to make sense of the noise, you and I, and we're trying to deliver it back to people and say, listen, here's how I'm making sense of the noise. What do you think about that? That mega trend is the driver of the token price side. The token is really what we've got. If we think we got poor last time because of Facebook and Google, we now actually own the rails. It's the new internet, and guess what? It's tokenized. And guess what? It's a globally homogenous asset class that's fractionalizable and available to anybody on the planet. I mean, fuck me, this is the most powerful. We're giving a global utility and saying you can all share in it. And it's a race to buy as much as you can as early as you can. People don't get this. They all think crypto's a scam. They don't get that we're basically giving everybody a chance to own the entire rails of the future.
According to Robert Kiyosaki, the author of the influential book Rich Dad, Poor Dad, Bitcoin is one of the most significant opportunities for financial gain in the history of the world. As a result of fear, he warns that many people will miss out on the opportunity because they will wait until Bitcoin reaches $200,000 before deciding that it is too expensive. While Kiyosaki is of the opinion that financial education is of the utmost importance, he encourages individuals to learn from both Bitcoin supporters and Bitcoin critics. As he puts it, investing is like a baby learning to walk. The key to financial growth is to be willing to learn from your mistakes. Despite the ongoing fluctuations in the market, Kiyosaki continues to maintain his conviction that Bitcoin could reach $250,000 this year. He has demonstrated his willingness to challenge conservative financial mindsets. Watch the clips.
Look, AI and robots are the largest deflationary nuclear bomb we have ever seen. People have no comprehension of what this means, but it's not there yet, right? We're not seeing productivity. We're all trying to figure it out right now. So we're not employing it at scale. So I get that. They'll drive down the oil price. Yes, we'll have a cyclical recovery in inflation that always happens, but the labor force participation rate keeps falling. We're just going to shut the borders on immigrants. The reason Canada's economy has been decent is because the immigration rate was so high. The reason Australia hasn't had a recession for 27 years, highest immigration rate in the Western world.
Yeah. As long as you don't look at per capita GDP, then it's a shit show. But on the top line, it looks good because of that.
Top line. That's right. That's right.
Yeah.
And it's also what distorts the housing market. I can't see where it comes from, the structural inflation. Now, people will say, particularly the commodity people will say, well, AI is going to require a lot of energy and a lot of copper and stuff for data centers. I get it. We will definitely have a cyclical recovery. Is it enough to offset China's aging population? China's not there buying commodities in the same rate of change that it used to, because its population is the fastest aging on the planet. So they're dealing with their trend rate of GDP collapsing from 11% in the early 2000s to, they claim it's 5%, but it's probably 1%, 0.5% right now. I mean, where the hell is the demand going to come from? So yes, cyclical demand. I just don't see a secular trend change. Now, what I do is I try and observe why people are saying things. So when you look at who's saying that, what unveils itself is generally people who are gold bugs, who believe the world should be high interest rates, pull Volcker, and gold should be roaring. They have a particular worldview. You have to be pragmatic about this stuff and say, well, we've had falling inflation for the last, my entire lifetime, basically. Has something structurally changed that you're going to increase demand? Well, it's not money printing, because we've been money printing for decades now, and it's never produced inflation. In fact, Japan couldn't produce inflation. It was never an inflation thing. It was a collateral thing. Could I be wrong? Could something happen? Of course. Could it be geopolitics? But it just feels like we've just trampled out most of the geopolitical fires in one go. Yeah, I mean, look, when it comes to it, there's many ways to get the debt bought. One of the ones is what Switzerland did. Well, in fact, the UK did it and Europe did it, is they basically mandated the pension system to be overweight bonds. That's one. The US is doing it by mandating the banking system to be overweight bonds. Look at Basel III. What is that all about? Mandating the system to be long bonds. They all know what the fucking game there is they're playing. They're playing the same game. Right? Basel III was all about getting them to hold more bonds. So you've got safer debt markets for the governments to issue into. So yes, can they issue long bonds and then force the pension system to buy it? Yep, we've seen Europe do that too. Like, there is no end to how you can force the system to buy it, because the financial system is controlled economy. I think we're learning this now. It's like Mark Andreessen's like shocked. What? The banks work with the government? I'm like, yeah, the government via the Treasury and the Fed, the reverse repo market is the funding market for the entire banking system. And you're forcing the bond purchases through all of this, and they're forced to by regulation to hold these bonds. The governments hold them by the throat. And so the banks will do anything they say. So
yeah.
Basel IV is coming. January. I think it's Europe. I think it's Europe goes first, and maybe the UK. And then it's the US and I think it's Europe first in January, and then the UK and the US by the summer. That's, guess what? More bond buying. And also, as we bring in AI, the velocity of business creation and destruction just gets faster and faster and faster and faster. No longer will it be available for people to IPO. It's even going to be difficult for VCs that have like this 7-year business model. Crypto VCs are used to having tokens where you can realize capital, velocity of cycle. But the only way of dealing with this is going to be ICO style markets, tokenized equity, or whatever that means, a hybrid instrument. Look, there's a lot there that I talked about, and there's plenty more other parts. But it's really simple. It's a $3 trillion, when it keeps moving every time I say this, it's now $3.5 trillion. But let's call it $3 trillion because it's easy math. $3 trillion asset. It goes to 100 trillion, at least, within 10 years. That's just extrapolating out the trend rate of growth. I'm not doing anything crazy, wild things. It's been growing like this. And yes, growth will slow over time, but then we've got AI agents who are going to be using this stuff as well. So fuck knows how fast this thing continues to grow. So here's this big wealth generating machine, the fastest growing asset, the best performance of any asset in history, keeps going. We get to 100 trillion within 10 years. So we're only 3% of the way there. Think of how much wealth this is going to generate for humanity. What? I'm saying $97 trillion. Let's assume you think, and probably rightly so, Raoul's an utter moron. I'm going to halve it. That's still 50 trillion, which is 100 years of value accrual of the S&P 500 of all the largest companies in America. People have no comprehension of this.
Yeah, I mean, what's the total addressable market of tokenizing assets? Like limitless.
Yeah. Well, because if you add derivative markets, which are 1 quadrillion, FX markets, they probably trade a quadrillion a year or more. Add in the global bond market at about 300 or 400 billion, the global real estate market about 300 billion. Sorry, trillion. Sorry, trillions with a T. Global equities like 200 trillion. I mean, this is la la land. And then we haven't got the activity created on chain by agents using it for economic activity, or us putting everything, all contracts online, or us using it for well, I guess deeds and stuff are contracts. But yeah, it's like, it's the architecture for the digital age. It's as simple as that. And people think it's all about currencies, cryptocurrencies and NFTs. What we're seeing is just vast, rapid experimentation with use cases. Memes are speed testing the ability to spin up a token for multiple cases, thinking about how we can tokenize culture, giving us a future work where we can be part of something. There's a lot of testing going on, but fuck me, we battle tested these chains. I mean, they're launching 100,000 tokens a day or something stupid.
Recently, Bitcoin has reclaimed its 20-day exponential moving average, EMA, at $85,500, experiencing a nearly 4% increase in just 24 hours. A significant purchase was made by Metaplan, which resulted in the acquisition of 50 bitcoins, bringing the total value of its holdings to 3,350 bitcoins, which is approximately $292 million. Metaplan made a strategic move by appointing Eric Trump, son of former President Donald Trump, to its advisory board. This appointment helped to increase the institutional credibility of Bitcoin for the company. However, concerns continue to be raised as the volume of Bitcoin transfers has decreased from $87 billion to $42 billion, which raises questions about the cryptocurrency's liquidity. There is a crucial support level between 82,500 and 85,100, according to analysts, while resistance levels are expected to be between 95,400 and 97,980. In the meantime, macroeconomic factors, such as the position that Trump takes on tariffs and the approach that the Federal Reserve takes to inflation, could be the driving force behind additional momentum. The technical indicators indicate that there is potential resistance at $92,500 and support at $78,200. Additionally, a relative strength index of 51.96 indicates that there is neutral momentum, and a rise above 55 may indicate that there is potential for further improvements. Thanks for watching.